Good morning. My name is Sonia Kumari. My student ID is UQT2005. Today my presentation topic is accounting for income tax. In this presentation I will discuss about the accounting profit, taxable difference between the accounting and taxable profit and some major point regarding this. Now I shall begin with the introduction. In the introduction, this report will discuss about the certain concept used into the corporate accounting for income tax, such as accounting profit, taxable profit, temporary difference and different tax assert. The report will also define how to compute the timing and the nature and the various issue is faced while computing in the creating how to compute in this report. And in the concept there are two type of difference. First, the accounting profit is calculated by the dedicating the explicit cost recorded by the books from of revenue earned by the entity and expensive financial year. And here explicit cost referred to like all the cost which is included manufacturing cost, like cost purchasing raw material, wages, salary and fuel expensive and so on. And on the other side, taxable profit is computed by only expensive which is under the income tax and other expensive are disallowed. And temporary difference, there is arise due to change in the value of asset or liability due to the giving accounting efforts the imported in the financial statement prepared for taxation purpose and no effect financial statement proposed as per the corporate law. There is a temporary difference chart. In the temporary difference chart there is a carrying amount, tax base, taxable permanent difference and taxable temporary difference and dedicated temporary difference, different tax liability, different tax assert and so on. And first, different tax assert has been created when the firm has been paid no income tax and particular financial year and amount paid the adjustment form of the profit subsequent financial year. In the arise when the income compute as per the income tax law is the more computed is accounting profit. There also include the losses and previous year which were not settled in the year and the benefit of the transferred in the further period. And different tax liabilities such as into expensive when the amount of liability as per the income tax of the representative financial year more than what to allowed in the word taxable profit and financial year, the different tax liability is created. This is not only the case of the fact but arise due to the difference of permission of any expensive income to be recorded in the income tax and accounting laws. In the recognized criteria, broad difference tax assert and the different tax liability are recognized upon the amount of the difference created in the previous year. Example, the base of the amount to be transferred a subsequent period. Example, carrying amount. It is important to be defined each of the assert which have probability treated of such asset entity in the amount concept and taxable account. And entity tax expensive of the company reported the financial statement of the representative year is 859 million and also recognized has been done the tax expensive financial year. The company has been made all disclose related to the tax expensive in the annual financial report which is state as correct. Moreover, there is some business and market which are computed in the note such as coals etc. Financial report and tax rate as started above the income tax rate is 30% for the period and the most of the tax expensive is not only the figure from accounting income tax multiplied the tax rate and adjustment of the for dollar 600 998 respectively. And different tax assert or the liability recorded different taxable income similar than the income reported on the income tax reported. So there is the temporary difference so result from the accounting treatment certain income expensive account with the treatment done by the income tax. Different tax assert is the opposite of the different tax liability, and so they are responsible for reduction of the further tax payable, and the company has already paid the tax on the book income to be recognized in the future, just like a period tax paid by the company. Income tax assert and income tax payable various standard. There can be the difference in calculated of the income tax reported in the financial statement and the income tax payable by the company due to the various in laws and actually tax expenditure with the leaves but not pays as such as income taxable computed in the liability side of the balance sheet, and they then the benefit cannot be claimed different tax liability and the created while the income tax payable is more than income tax paid, then the benefit can be claimed by the company. Income statement tax expenses are different in both cash flow statement and income statement. The cash flow statement refers to the standard where all the expenses paid and income earned and included in the statement does not include any non-cash items such as profit and loss, and there is a flow the various standard and the loss formed from the same. Also, income statement can include items which are only relevant for the current period, whereas cash flow statement indicate only expenditure for income which are paid, received and particular year, whereas not and same and related for the financial year. Timing different and permanent different. The temporary difference can be revised in a future as per defined standard and law by the creation and different tax assert in the tax liabilities, and different payment different are those expensive or income that is arise due to the difference in the computation and income as per the taxation law and the accounting law, but not are going to the revise or the adjustment financial year. And what to do? We have to do find treatment of the tax expensive, which is confusing but and difficult to because standard and law have above the treat certain expensive in the particular way, which is sometimes is hard. It is very crucial to understand the concept deeply and know the reason for the treatment of such as expensive. It has been noted that the tax expense are single the term that can be treated responding differently income statement, cash flow statement and balance sheet to compute a different tax assert liability is also difficult because of the many confusion and understand the temporary difference and permanent difference. In the conclusion, due to the timing difference which arise due to the difference in the according to profit, taxable profit give the rise to certain and tax assert different tax liability. Accounting profit is one of which is after adjusting income and expenditure is in income statement as per the accounting in law, while taxable profit are those which are most adjustment of such expensive income such as taxation law. Moreover, timing difference is difficult to temporary difference is permanent different. It is temporary difference which lead to creation of difference tax assert of liability and a law to be adjusting subsequent year, while the permanent difference does not treating in reported calculating profit as per the accounting and the taxation law. And thank you.